Yo, my people, I welcome all of you once again to my channel. If this is your first time watching my video, consider subscribing because on this channel, I always give my best. So follow me closely as I walk you through. Yeah, in my previous webinar, I talked about internal liquidity. You know, in forex trading, as institutions trade, they always leave their footprints in the market in the form of liquidity. And liquidity is where money is or where cash is. And where money is located is where price goes to. That's what drives the market. Yes. And we have two types of liquidity. We have internal liquidity and external liquidity. In my previous webinar, I already talked about internal liquidity and how to locate them on the charts. Therefore, in this webinar, I'm going to touch on external range liquidity. Yes, and external range liquidity is of two types. We have buy side liquidity and sell side liquidity. Therefore, we are going to look at them one after the other, starting from buy side liquidity. Yeah, so we are going to start from buy side liquidity, which is always located at the premium zone. Talking about buy side liquidity is always at premium levels because the liquidity is at the buy side. And some of the examples of buy side liquidity are tops and highs. Examples of tops is equal highs. So we have tops and highs, that is equal highs and double tops. So one of the examples of buy side liquidity is tops. When we say tops, we are talking about double tops being formed at the premium levels. And the second example has to do with highs. Yeah, so this particular zone, so I'll call it relative double tops because of the relative highs there. Looking at these tops at the premium level, the first top is higher than the second top with the marginal pips differential. So I will call it relative double tops or relative tops. Yeah, so let's look for a case study. This is another example here. Double tops formation at the premium level. This one, they are of the same highs as you can see. So they happen all the time in the market. Yes, this one, they are not exactly of the same highs. And this is another typical example of double tops or double highs formation. Yes, so we just draw our horizontal line, then they are all the same highs. Yeah, that's it, my people. And aside double tops and equal highs, we also have another examples of buy side liquidity, which are bearish order block, also located at the premium level. They are the last bullish candle before the downtrend. Yes, it always happen. In this case, the last bullish candle, the up move, is our bearish order block. I'm going to map it and extend it to the right. Yes, so meaning the whole of that zone was our bearish order block. In future, price rejected at that zone and then came for a retracement, then finally violated the bearish order block zone. So that's how it is, my people. And we also have mitigation breaker and then PDA. Our PDA tool is located at the premium level. PDA simply means premium discount array, which consists of mitigation breaker and other blocks, which consists of bearish OB and break in market structure. So as I already demonstrated to you how to locate bearish order block. So bearish order block is an example of premium discount array. And this is another example of bearish order block. So the whole of this zone was our bearish order zone. Yeah, so that's how it is. And don't forget, bearish order block and break in market structure are examples of premium discount array, normally found at the premium level. And we see break in market structure around this level. So this level is our flip line. or breaker. The reason why it is called flip line is because this is the zone support tense resistance, or this is where break in market structure happens. So any zone or any level break in market structure happens, that zone or that level is called a breaker zone or flip zone or support tense resistance. Now let's get to the second example of external range liquidity. So our second example is sell side liquidity. Just ignore this one here, it's a typographical error. So let's look at various examples of sell side liquidity. Some of the examples are equal lows and double bottoms. We also have bullish order block and break in market structure formation at the discount level. As you can see on the screen, you have lows, that's equal lows. It can be O lows, session lows, weekly lows, monthly lows, etc. And the second one has to do with bottoms, that's double bottoms, that's it. They are all self-explanatory. I'll take you to the charts from here so that we look at them one after the other. Looking at this side of the market, this is our discounts level. As you can see, there was a double bottoms formation or equal lows. So I'll map it. Actually, they are not of the same bottoms, as you can see. So looking at it carefully, the second bottom was a little bit lower than the previous bottom. So I will name it relative double bottoms or relative equal lows. That's it. My line is not thick. Let's look at another example. This is a typical example at the premium level, but this very double bottom formation, though it was formed at the premium level, this is a discount level. So this is our double bottom formation at the discount level here, though it is not a major discount zone. By looking at it very well, the bottoms were not exactly the same. So it is relative double bottoms or relative lows. Let's look at more case studies. We also have a very good example of double bottom formation here. As you can see, where my cursor is. We have a very good double bottom formation here at the discount zone or equal lows, where this low cleared the old low yen. That is where our sell side liquidity was located, and when you observe it carefully, you could realize after price has taken care of or cleared the old low yen, the price went bullish. So let me map it. So that's it, my people. There are many in the market. So this is how we locate buy side and sell side liquidity in the market. And we say buy side liquidity are always located at the premium level, and examples are equal highs and double tops, all highs, and so many more. And then the sell side liquidity is located at the discount zone, where we have equal bottoms, equal lows, and double bottoms, as well as old lows, bullish order block, and breaking market structure at the buy side liquidity. So we are going to look at the last example of sell side liquidity, which is a bullish order block, always located at the discount zones, and it is the last bearish candle before the up move. So right now we are going to look at some examples. Looking at this discount zone, this is the beginning of the bullish trend, and then the last bearish candle before the up move was this one, this momentum bearish candle. After that, price consolidated a bit, then went long. So I'm going to map the bearish order block. In mapping it, there are two ways of doing so. The first way is you targeting the body, and the second method is you targeting the wicks. I mean both upper and lower wicks. That is, if the wicks are short. If the wicks are short, then you can include them. But if the wicks are long, you just target lower and upper body. That's all. So my people, this is one example of sell side liquidity, which is a bullish order block. There are many, but because I don't want to make this video long, you can practice on your own. This is a typical example of volume imbalances. I already talked about it in my previous video. On this note, I would like to sign out here. See you in the next video. I love you. Bye bye.